In this video, we're going to simplify market structure for good. It's something that's overcomplicated and something that should be very easy. So what I've got here, I've got the NASDAQ pulled up on a 5-minute chart. What I've got up here is a swing high and a swing low. Pretend this isn't here. Just pretend this has happened and we're at 10 o'clock. We're in a macro. So before we get into this, especially if you're new, you have to take the time to learn the terminology with ICT. If you don't know what a fair value gap is, an order block is, a breaker, mean threshold, consequent encroachment, just all the big words that he uses, I'm not going to go over it here, but you need to take the time to go through the material and figure it out. But basically what you need to do when you're marking out market structure is define your swing point. This will be the swing high, this will be the swing low, draw a fib on it. That's your dealing range. And what you want to do is you want to wait until we get a retracement back up into premium or discount. Above the 50% line is premium and below it is discount. We always want to sell on a premium and we want to buy in a discount. And so the first thing we need to look at is manipulation versus displacement. So right here we're coming up, we've made a swing high. What that is it's got a lower high on each side. Alright, we come up, we don't take out this high, we go back down. So what that should tell us is that the market's weak. Or if we barely sweep above it and don't push through, if we push through the level, that's going to be displacement. Like right here, we've got a swing low here, a swing high here. We come up, we manipulate it, we just sweep above it. We're not pushing through it, so it's likely to fail. So we're going to come down, and you want to target this swing point here. Okay, we displace through that swing point, so that means we are likely to continue. Not all the time, but if you're manipulating, it's likely to reverse, and if you're displacing through those levels, it's likely to continue. So that's the big thing on market structure for me, is just recognizing, manipulation versus displacement, and stop trading every market structure shift and use narrative in this, what I'm talking about. Like, are we pushing through swing points, or are we just barely sweeping above and reversing? So that'll help filter out a lot of bad trades right there, just using manipulation versus displacement. Marking out your dealing range, putting your fib. You see the levels I've just got 0, 0.5, and 1 with the half level notating fair value. And if we're selling, we're going to sell in a premium and we're going to buy in a discount. Okay, the second thing we have to do is you have to learn how to draw impulses. And basically impulses is a fancy word for displacement. So say we're up here, we see we push through this low. I've got a little indicator that helps me mark out the fair value gaps, but what we have here, breakaway gap. Usually what happens after that is institutional order flow entry drill, which it didn't happen here, but that's likely. But we did see how, look at the bodies underneath, right at the 50% line. So that should tell you we are very weak, and we are likely to continue. This is really all you need to get the meat of the move, the majority of the move. You don't have to get at the very top up here. You don't have to be in this trade at 9:35. You can wait for it to break this swing low, wait for it to come down, and then use like this fair value gap here, 1, 2, 3. This would be the body. Stop would be above this high. As soon as it got into this level and started breaking down and started failing, you could get in right at the 142 level. Stop above 197. Yeah, that's quite a bit of a stop. That's not a very good example, but just trying to show the premium and discount, showing how to draw a dealing range, and just watching swing points like swing low, swing high, Are we manipulating or are we displacing? You know, that's going to filter out a lot of your trades. And another thing is to quit. You know, getting stuck on one time frame. You know, I trade a lot of the 1 minute chart, but I'm always going to look at the weekly. I'm always going to look at the daily, and you know, I'm not going to draw out every key level on every time frame, or you know, your chart's going to be a mess. But you do have to know, okay, on the weekly we are in a fair value gap, or in a daily we have just displaced through a swing low, or whatever. You have to build narrative from the top down. That's going to help you with your buys and, you know, your session volatility. And I wouldn't get too stuck on daily buys, because really all you really need to know is what the session that you're trading, you know, is going to do. And that's really going to, you know, help you filter out a lot of you know, a lot of bad ideas, a lot of trades, and not to get married to your buys, by learning how to mark out market structure. Are we displacing or manipulating? Are we in a premium? We draw out our dealing range. Are we in a premium? Are we in a discount? And then looking at the PD arrays, and you know, looking to take a trade, you know, in that direction. Basically, my favorite way to trade this example here would be, we're in this fair value gap. We start breaking down right when right here, this candle right here, we invert both these fair value gaps. Just because you invert this one don't mean it can go down in a deeper discount and grab this before it shoots up. But once we've inverted both of those, I'm looking for a retracement back up into this level right here, and as you can see, it hits it pretty much, you know, right smack in the middle of this one. That's my trade. We have inverted bullish order flow. We've inverted it here, and we've made bearish order flow here. You know, we've displaced. So we've inverted a bullish fair value gap while making a bearish one. So as soon as it gets back into that level, you know, I'm taking that trade. I know it's not in a premium of that dealing range, but you know, that's my model, is inversion fair value gap while making a fair value gap, and then we retrace into the, you know, the PD rate. So I hope this, you know, helps simplify, you know, market structure. You don't have to trade every market structure shift on the 1 minute chart. You need to have narrative, look at the weekly, look at the daily, look at the 4 hour, the 1 hour, the 15 minute down to the 1 minute, however you want to do it. But just know where you're at on the weekly, know where you're at on the daily, and at least know where you're at on the hourly, especially if you're scalping. And you know, that's going to help you filter out a lot of trades. Understanding manipulation versus displacement. Like I'll say it again, manipulation versus displacement will save you a lot of trouble. If we're just, you know, sweeping highs or sweeping lows, you know, it could continue, but the probability of it is a lot lower. But if we're displacing through lows while creating fair value gaps, you know, that's what we want to see. And we don't have to catch the high, we don't have to catch the low. Like right here, you can wait on this move to happen, and right when we invert a fair value gap while making one, you know, that's my bread and butter. So I hope this helped you. I appreciate you. God bless you, and until I see you next time, good luck trading.